I'd really like to suggest that there are 5, 6 key elements why the role of investment advisors are important. You have an economy which essentially has 200 million people today that will grow to be 400-500 million people over the next 25 years or thereabouts. The bulk of those 200 million people today are fairly young, so the population has an average age of 18. And therefore, when you think about offering investment advice, there are 5, 6 key elements that are key. The first, obviously, is yields, and this is fundamentally around returns. But those returns are invaluable if, over the long term, they don't outperform inflation. So therefore, it's about long-term, above-inflation yields. Currency is also extremely important, and it's important that we always ensure that we're properly matched from a currency perspective, ensuring that whatever you're offering people the opportunity to advise into is liquid, I would say, is also critical. But ensuring that we get investors investing in the appropriate instruments for their duration. So if you're a short-term investor, keeping you essentially at the short-dated money markets to fixed income segments, or if you have a longer perspective on the market, basically putting you into equities, all sorts of other variable interest or variable income securities. But perhaps the most fundamental issue that we all need to be focused on is the transparency and governance around those securities and around the companies and around the managers or other people that we are investing capital with. I would say, however, that all of that is a theory, and if you pardon me, theory never translates on its own into reality. I would rather say to you that the most important thing that investment advisors and portfolio managers must do in any economy is to be relevant to the development of that economy. And it's a very, very simple concept. It's a concept around how you connect Wall Street to Main Street. And why is that perhaps more important in Nigeria today and imperative in Nigeria over the next 25 years? It's a simple fact that we live in a country today which already has very substantial deficits. So whether it's our education or our healthcare, or you look at our infrastructure, or you think about housing, already today very substantial deficits exist. And the population continues to grow today at a faster rate than the economy is growing. So those deficits are only going to widen. This year's budget, which is Nigeria's largest ever budget, is only 5.8% of Nigeria's GDP. Now, why is that relevant? The largest pool of capital formed domestically in this country, if you all agree with me, is the 8.3 trillion naira of capital sitting in Nigeria's pension funds. That 8.3 trillion naira of capital is primarily financing. 85% of it is financing the government. So it's either buying government bonds or it's buying treasuries. And remember, I just told you that 5.8% of the economy is the government. But it's worse than that. That 5.8% that you're giving to the government is poorly spent. And why do I say so? 67% of it is spent either on government recurrent expenditure and salaries, or is spent on servicing the government's debt. Only about 30% is available for capital expenditure, in other words, physical or social infrastructure, or housing, or all of the other elements which ultimately are important to you and I in this economy. So therefore, we must ask ourselves the question, who is financing the other 94.2%? And this really, for me, is a role that all of us who sit in markets in this economy fundamentally have. It's the role of forming capital and ensuring that that capital is being transmitted to those areas that require the capital most. If we continue primarily just to fund the government, there is only one way that this story ends. And I'm not a doomsday prophet, okay? But the only way it ends is that this will become, forgive me, potentially the largest ever failed state in the world's history. Because the reality is that all of those other deficits need to be financed, and they need to be financed urgently. If, however, you're able to succeed in financing them, what do? We essentially create an economy which, running at 7-8% per annum, has the ability to be the 7th largest economy in the world by 2050. Sounds like an impossible dream. But even badly managed today, it is already the 25th largest economy in the world. The reason it needs to grow that fast is that it will be the 3rd most populous nation on earth by 2050. And that population is forecast to be well over 450 million people. And this therefore means that today's housing deficit of 20 million homes will become perhaps 50 million homes. Families will be smaller at that time because hopefully we've finally learned that you shouldn't all be like me and have 4 or 5 children. But notwithstanding that, these deficits will continue to widen. The infrastructure deficit today, which is already $30 to $40 billion a year, will only get wider. I put up something here which I describe as a very important circle, and I'm just going to spend 2 minutes on it. Yeah? If you end up understanding the importance of all of these issues, then it goes fundamentally to how do you get capital into real assets. It's not just about developing infrastructure. It's actually about how you develop sustainable prosperity. And how does this story work? It works everywhere else in the world. So I'm not saying anything to you that other people don't do, and it's tried and proven. You start off investing in 4 key areas of infrastructure: in power, in energy networks, in transportation, it's gone up again, and in broadband infrastructure. That broadband is what we describe as the infrastructure of the youth or the infrastructure of the future. And what it does is it catalyzes investment activity in a variety of sectors. So you see investments begin to go into retail, into agriculture, into mining, into SMEs, into manufacturing, into education, into healthcare, but even into security. And you wonder, why is all of this relevant? Each of those elements I've mentioned is fundamentally driven by 2 pieces of infrastructure. Agriculture is all about power and transportation networks. That's what takes low-value farming and turns it into high-value agriculture, okay? An SME is transformed by 2 simple things: power and broadband infrastructure, okay? We have a Fulani herdsman problem today in Nigeria, and people think it's an ethnic or a racist or tribal issue. It's not. It's fundamentally an infrastructure problem, but we've never ever had the opportunity to think through it correctly. 2 things have driven it. One is Lake Chad drying, and therefore people have to move closer to water. If you look at Lake Chad over the last 30 years, you'll understand that. The second principle is that we're always moving cattle rather than moving meat in cold chain infrastructure. You have no electricity, so cold chain infrastructure doesn't exist. If you've ever traveled in Brazil, Brazil has more cattle than people. It has 308 million heads of cattle. You would never have seen a cow in the countryside or in the city on the streets. Yeah? We have about a seventh of the heads of cattle that Brazil has. But because we lack that infrastructure, it creates a major day-to-day problem. But when you do that investing, what does it create? It creates jobs. And if you ask me what the most important thing that an economy of 200, 300, or 400 million people who are young people must do is to create jobs sustainably every decade over the next few decades. And when you do that, what happens? The things that are important to you and I in this room. Savings grow, pensions grow, financial literacy and financial inclusion grows, something called digital inclusion, which may not be relevant to you and I, grows, but demand for housing also grows, and that has an impact also on mortgages and financial markets, and something called student housing, because as they become more prosperous, they want to educate their kids better. All of those things grow. And what it all translates to, ultimately, is to what we describe as sustainable prosperity. So the fundamentals of this are about recognizing that the markets in which you and I operate today can be the secret weapon for changing the course of this country's history. The markets allow you improve governance. The markets will allow you increase transparency and promote accountability. But to those who know the power of the markets and can use them well, the markets essentially ultimately have the opportunity to help you and I reduce corruption. I'll just finish by talking very briefly about 2-3 key things. Markets can solve Nigeria's infrastructure problem, but markets can also solve Nigeria's housing problem. And let me also share some of the numbers with you. The opportunity today, if you just think of today's deficit in Nigeria, in housing finance alone is a 160 trillion naira opportunity today. And that opportunity is going to more than double. So why wouldn't you be interested in learning more about it and finding out how you can gain some market share? The opportunity in mortgages today is a 200 trillion naira mortgage opportunity today. And that's just using the average cost of a house as 10 million. And the reality is houses cost a lot more than 10 million naira. Okay? So the opportunity is already today much larger. Yeah? And this is really the scale of what is available to us. But it's not only these areas. It's also recognizing the power that sustainable finance, both Islamic finance and green finance, play in these markets and how deep these markets are domestically, as we saw with the issuance of Nigeria's first sukuk, but also globally. Again, there's a growing global market, yeah, in all of these areas. I would say to you that fundamentally, if we recognize the true power of these markets and financial markets that we're a part of, we will begin to unlock an incredible future for this country. And if we deliver that, it is a win-win for all the parties. A win-win for regulators, a win-win for marketplace providers, for intermediaries, for the investors on the other side of it, and for those who require capital in our marketplace. But it's going to require each and every one of us to recognize that our role is not just about our firms, it's completely not just about financial and investment instruments. We actually have a unique opportunity to play, not only in the development of this economy, but also in financing the future for this country.